Hey everyone. Welcome back to Insurance World TV, where we break down all things insurance in a simple, honest, and relatable way. We are continuing with our series on frequently asked questions commonly asked by clients during signing up of life assurance policies. Today, we encountered a very sensitive but important question from one of our subscribers. What if my dependents intentionally cause my death just to benefit from the life insurance payout? That's why I'm hesitant to buy a life policy. Well, that is a tough one. Let's talk about it. First off, I want to say this. If that's a fear that's even crossed your mind, you're not alone. Many people silently carry this worry, especially if they've seen or heard stories involving family disputes over money. Listen. This concern may sound extreme to some, but in many parts of the world, including Kenya, family dynamics can be complicated, and where we've seen or heard stories of inheritance disputes, land grabbing, spouses and siblings killing each other because of wealth, it may not be far-fetched to view suspicious death after someone signs an insurance deal to be a foul play. Just like those family members would kill for a plot of land, or a family house, or some rentals, they would also kill for the cash value of a life policy, since their motivation is money. But here's the truth. Life insurance companies are fully aware of the risks associated with foul play, and they have strict procedures in place to handle these kinds of situations. Whenever a life insurance claim is filed, especially if the death seems sudden or suspicious, it doesn't get paid out automatically. Insurance companies launch thorough investigations. They work with forensic experts, law enforcement, and even private investigators if needed. And here's the kicker. If someone is found to have caused the policyholder's death, they are automatically disqualified from receiving any benefit. That's called the Slayer rule. And yes, it's a real legal principle. What is the Slayer clause? The Slayer clause is a legal rule found in many life insurance policies and estate laws, including those in Kenya and other jurisdictions. It says, if someone is found to have intentionally caused the death of the policyholder, they are not allowed to benefit from the life insurance payout. In other words, you can't kill someone and then collect their life insurance. How it works in practice. When a death appears suspicious, e.g., poisoning, staged robbery, or unexplained accident, the insurance company pauses the payout. Investigators step in. Police, pathologists, insurance fraud units swing into action. If evidence shows that a beneficiary was involved in causing the death, the company rejects their claim, even if they were legally listed as the beneficiary. The money is then redirected to contingent beneficiaries, if any, or held in trust for the estate and handled through the court system. Does this apply in Kenya? Yes. While Kenya might not call it the Slayer clause in official documents, the principle is recognized under common law and is followed by Kenyan insurers. Companies require a full investigation before approving large or suspicious claims. Real-life implication. Let's say Wanjiku takes a life policy and names her adult son as the beneficiary. If Wanjiku dies under strange circumstances and her son is suspected of foul play, the insurer will hold the payment. Police and insurance fraud teams will investigate. If he's found guilty or even under strong suspicion, he will not be paid. Slayer clause equals no payout for murderers. It protects you, your legacy, and ensures that life insurance isn't used as a motive for crime. So, what does this mean for you as someone thinking about getting life insurance? It means that your policy is not a blank check that anyone can access by doing harm. These safeguards exist to ensure that only legitimate claims are honored and only the right people benefit for the right reasons. The Slayer Clause, or its equivalent in various jurisdictions, is a powerful tool that can be incorporated in a will or insurance policy to deter people who have the motive of killing a relative for financial gain. And if you're still uneasy, here are a few things you can do for extra peace of mind. 1. Choose your beneficiaries wisely, make sure you trust the people you're naming. 2. Review your policy regularly. Remove any person you no longer trust. Update the list as family dynamics change, don't set and forget. An outdated policy can leave you vulnerable to people you no longer want to benefit. 3. Consider setting up a trust, it adds a layer of control over how the payout is handled. 4. Work with a trusted lawyer or financial advisor. Set up legal structures that block payouts in the event of suspicious or criminal circumstances. They can include specific clauses, especially in custom or high-value policies. 5. Avoid disclosing too much. Don't share the details of your life insurance policy with everyone. Only tell trusted individuals, not the full value or terms, just that you've made provisions. The less someone knows about the amount or access, the lower the temptation. 6. Name multiple beneficiaries. Spread the benefit among more than one person, e.g., spouse plus children plus trustee. This reduces the feeling of personal jackpot and encourages collective responsibility. 7. Have a contingent beneficiary. If your primary beneficiary is disqualified, e.g., due to foul play, the money passes to a secondary person. This weakens any incentive to cause harm, they know it won't automatically benefit them. 8. Include a letter of wishes. This is an informal but powerful letter that can express your values, reasons for naming certain beneficiaries, and your hopes for how the money should be used. It can morally influence behavior, especially if read alongside a will or policy. 9. Live a secure, private life. Sometimes it's about lifestyle, be discreet, stay away from toxic relationships, and avoid confrontations when possible. Emotional jealousy or disputes over inheritance can fuel dangerous behavior. Remember, most people take life insurance to protect, not provoke. By being thoughtful about how you set it up, you can make it foolproof and discourage anyone from seeing it as an easy way to get rich. At the end of the day, life insurance is a tool to protect your family, not to endanger it. If you've been holding off on buying life insurance because of this fear, I hope this video helped clear the air. You don't have to live in fear, just make informed choices and set things up correctly. If this video helped you, give it a thumbs up, subscribe, and drop your thoughts or questions in the comments. We are building a community here where we can talk openly and learn together. Thanks for watching, and remember, insurance isn't just about money. It's about peace of mind. See you in the next one.